we've seen Access Bank grow from 7 positions out of 70 banks, in the past, in 2002, to the respectable 4th position it is now. Can you tell us the journey from that 2002 to now, how you have been able to shape this growth?
You did mention that we have gone from a certain position to 4th, and this brings me back to about a year ago. I was at one of these fora where I was being asked questions by commercial equity analysts or investors, and they spoke about this remarkable transformation story from a 2nd-tier bank to a 1st-tier bank, remarkable. And I told them that actually I need to correct that. It's not from 2nd-tier to 1st-tier. It's actually from a position of maybe roundabout, 4th tier really. We were around about between the 70th and 90th bank, ranking out of the industry that had 90 participants in 2002 before we came in. And so we've been blessed to have enjoyed a journey that has seen us, basically leap out from 4th world to 1st world almost, if you like. If I think back, when I got into banking 25 years ago, the Nigerian banking industry really had about 5 models. You had the government-owned model, which was either government interest in nationalized foreign merchant bank, or government interest in the big 4 commercial banks, as they were then called: First Bank, UBA, Union Bank, and Afribank. You then had this family-owned bank, big man, either government contractor or former military general, that type of thing. And then you had the owner-managed banks, the first of which, in the true sense of it, was FCMB, or First City Merchant Bank, as it was called. And then that opened the way for the IBTC, then Diamond Bank, GTB, and Zenith Bank, amongst others. Now, the successful banks you see today in Nigeria are either the owner-managed banks, largely, or one of those big 4 institutions I alluded to, where the government's interest has over time been sold down, in one form or the other, with the exception maybe of Afribank, which is now, Main Street Bank. I think the key thing to note is that the banking industry in Nigeria has been able to attract more than any other sector significant talent that is capable of competing with bankers anywhere in the world. Now, when you have this intellectual capital and you have entrepreneurs who have access to financial capital and they can combine these, you then have the type of results that you have seen, in Nigerian banking that has seen the sector really come of age. Now, I worked in Guarantee Trust Bank, and a successful bank by any measure, and I worked as a professional. I rose to executive director of the bank, and I guess in my own small way, I guess I contributed to a bit of the success the bank has recorded. And I was trying to come to terms with the reason for being restless. I just happened to go to Harvard Business School in 2000 for one of the senior management programs. So I was there for almost 3 months. My late brother-in-law had just finished his MBA from HBS. He gave me a book, and the book was called Buyout. The author is Rick Ricketson, who himself is also a Harvard MBA. And essentially the book speaks to professionals in any industry, and it's a roadmap for a professional in an industry to move from being a high-earning professional to be an owner of your business. And I read it, and I was clear that the cause of my restlessness was that I had seen this owner-managed model. I'd seen it in the bank I worked at the time, GTB. I'd seen it in banks run by people that I had a lot of respect for, and I wanted to enjoy a similar experience. I didn't want to be just the manager of or the CEO of a well-established bank that was doing well. I wanted to have on my track record, on my CV, the establishment or the creation of a world-class institution, or at least that I tried and I failed in the process. I convinced Herbert, who highly respected executive director of the world, high-performing bank, as well. And look, let's do this together. And he saw the opportunity. He bought into the dream, and so we crafted the vision of, basically a world-class, financial institution run by Nigerians, owned by Nigerians, as well as any other investor who found the story compelling. But irrespective of what the industry size was, we wanted to rank in the top 5. We came up with a clear game plan of how to do that, and it's very simple. We used to have a boss who said, when your customer says jump, don't jump. Ask your customer how high, and then jump higher. And we saw that the leading banks were good at doing this, so we needed to really change the game. We needed to introduce a value proposition to our customers, which wasn't about asking how high do you want us to jump, which was about sitting down with our customers and saying, together, right, we can jump higher than anybody else has. And it was a model that, in essence, dictated the type of institution we would be in terms of our standards, in terms of our values. Essentially, we said to ourselves we would take a large corporate player in a sector. We would understand the value chain of that sector, dissect it to its minutest detail, just the way consultants would, and then we would seek to, through product, services, or interventions, add value to that value chain by lowering the cost of business in value chain or increasing revenues, and ensuring that